Hello investors, today we'll speak about dividend stocks, about passive income and nice great dividend stocks to buy right now. So let's start with the first stock for today. It's Verizon. It's a company from the communication service sector. Its current dividend yield around 7%. Let's check it. It chart on the monthly time frame. We see that this stock already oversold the resized 33, so it can be a good time to buy this stock. Also, if you look for the last 10 years, it looks like the company trade in a range between 37 to 60. So now we traded in the lower border of this range, and in my mind here there is nice probability to see this stock start to bouncing. Let's have a look on it fundamental parameters. So here market cap 158, dividend yield is 6.9%, and of course very low P ratio. Now it's about 7. I remind you that the average for S&P 500 P ratio now is 15. So here we see the company show a nice growth in revenue. 5 years ago it was 130. Now for the last year it continued to grow 136, and also nice marginality. Look at the marginality, very impressive figure. So for such sector, net profit margin, by the way, also continued to grow from 11% and for the last year it was about 15% net income margin. Also all these 5 years it was a profitable company, so very good sign for the investors. And let's put our attention to the dividend history of this company. So the payout ratio is 50, so it means that the company paying 50% from its net income to its shareholders. Here I see a room even to increase it dividend payments, dividend payout. And the dividend history, the company continued to increase in dividend payments, and of course the dividend yield. Last year it was 6.5, before it was 5%, so it's a classic dividend stock. So Verizon Communication is the first dividend stock for today. Its ticker is VZ. And I would like, now it's very tough year, could be for the stock market, for the bond market, for banking in the US, and that's the reasons why I prefer to receive a stable cash flow. Of course I would like a stable dividends. So let's move to the next stock for today. It's Abbvie. It's another company from healthcare sector, but this retail trade, and this company owns drugstore chains. Its dividend yield is very close to 6%, very in my mind good dividend yield. If we'll check the chart, so here I think it was an impulse, the first and the second, the third, the fourth and the fifth. Most probably we are going near the finishing of this correction. By the way, here we saw a divergence, so I think it can be finished here. By the way, we can say that last 8 years the stock traded in a range, so most probably the finishing of the fifth wave in this range, telling me that we may see a start of a new growth in this company. So let's check the fundamentals of WBA. Market cap is less than Verizon, about 30 billion bucks, but dividend yield very impressive, 6%. It's very old company, more than 100 years. So the performance, we see that last the revenue is very stable for the last 5 years, and the last 5 years we see increasement in the marginality. In 2020 it was about 1%, then 2%, and for the last year more than 3%. So the efficiency and marginality at all for WBA increasing, improving, and of course for me it's a very positive sign. The dividends, let's have a look. Yes, the company increased dividend payments for the last years, and I think the average for last 3-4 years, the average dividend yield is more than 4%. So very nice dividend history. And also, if we look at the debt levels, the cash levels, so we see for the last the levels of debt for the last 3 years is decreasing. So the company now in a high level environment of interest rate, the level of in the market are elevated, and I think it's a good time to decrease it, that portion, that amount. So the company, by the way, has enough cash in the balance sheet, more than 1 billion, and debt the 36 billion bucks. And I hope that the management of this company will continue to decrease the amount of debt. And let's move to the next and the last stock for today. It's Abbvie, its ticker. So here what I see, for last 3 years we traded in increasing channel. Now we traded more closely to the lower border of this channel. That's why I'm expecting to see the stock to maybe at 180 bucks. In this case, the potential to grow is more than 10%. So the dividend yield is around 4%. Let's have a look on the fundamental market cap to 277. This no, I think it's a mistake here. The history of this company, I think, is much longer. If we look on the fundamentals of this company, so it's very impressive growth. Look there, the revenue in 2018 was 32 billion bucks, and for the last year it's 58. It's very close to double of its revenue. The net income also, we see that net income of the company is increasing. So the marginality, net income margin, very impressive figure of 20%. By the way, look, the gross margin is 72, EBITDA margin 54%. So very good marginal model for this company. For healthcare to see 20%, it's a very impressive figure. And of course the dividends, the dividend yield 3.6%. By the way, here the dividend yield is decreasing, but it's because of the stock, the price of its shares is increasing. But the payouts itself, the dividend payments, we see a stable growth. So it was 4%, and it decreased to 5.7% for the last year. So the dividend per share itself are increasing, and of course for me it's good sign, positive sign. And let's have a look also for the debt. If we see the debt for the last 3 years, it's also increasing. By the way, in 3 years the company decreased its debt amount for 20 billion bucks. And by the way, the free cash flow, if we'll check, it was 12, and it's doubled in 5 years. The free cash flow amount decreased. I remind you, the free cash flow usually it's the difference between operational cash flow minus the investment of the company, and you receive the free cash flow, and usually from the free cash flow you're paying. If you have a good free cash flow, you can offer to yourself pay dividends, juicy dividends. And in this case, Abbvie, I think, is very strong company with a nice marginality, and of course it's very good that the company continue in such a not stable times, not stable market, continue to increase in dividends. So generally speaking, it was my 3 dividend stocks for now. I hold my portfolio VZ and WBA. I think that they are very stable. The dividend yield for me is quite enough. And if you like this video, of course, press the like button. Don't forget to subscribe, and see you on the next time. Bye.